African Dream podcast. I am Eunice Ajim and I'm your host. Today we have Maxime Bayen. He's a senior venture builder at BFA Global. He supports and advises early stage investment as well as portfolio companies. Before he joined BFA Global, Maxime was a senior venture builder for Green Tech Capital, where he assisted 7 African startups across various industries. Every week, Maxime releases insights on the African startup ecosystem via Africa, The Big Deal. The Big Deal is a weekly conversation starter on the African startup ecosystem based on a curated database of deals from across the continent. Maxime, it is so nice to have you on the podcast today.
Hi, Eunice. Thank you for having me. Great to be here.
Yeah, definitely. So I've given a quick introduction about your stuff, but it's always great when, people hear exactly from you. So tell us a little bit about your story and how you got involved into the African tech ecosystem as a whole.
A couple of years, but this basically started. I started my career as a consultant for doing advisory for mobile operators in the Middle East and Africa regions. Mm-hmm. And that's, I guess, where I realized the impact private economy can have on economic development, and started to really embrace it. And this is when I decided at some point to move from working with large corporates like telcos to earlier stage companies, but still with really this intention to contribute to economic development through entrepreneurial approach and the private economy. So that's always been the goal, and that's really what attracted me to work with startups in Africa.
Okay, awesome. I'm just curious, where are you originally from?
I'm French.
Oh, tu parles français?
Tout à fait.
Oh, je savais pas. I did not know that. And I know we've spoken in the past, but I did not know that you were French and you spoke French. This is awesome and really amazing. Well, really, I know that you mentioned that you've always been interested in just, economic development. But you're doing a lot. I think if anybody that is involved with the African ecosystem and they don't know about Africa, the Big Deal, then they're missing out, right? Like, what was the inspiration behind, and, how did you get started? I mean, I'm sure prior to, the Africa, the Big Deal, I don't think there was a lot of data points around just, the VC landscape on the continent, what are some of the awesome companies, what they're doing, how they're raising money. Like, what was the thinking behind, Africa, the Big Deal? And just talk us through the story. Like, how did it get started? What has been the challenges, and how is it going right now?
Sure. So it started really like a pet project. When I like a lot of companies, it started because I wanted to solve a problem that I faced myself, which was that I couldn't find reliable data on startup deals in the continent. And so that was back in 2019, and I thought, okay, let me compile this list by screening media and checking around. And so that's how everything started. And then a bit later on, my former colleague and great friend Max Cuvelier offered to join me to basically use this data and turn them into super cool visualization and insights. So that's when the newsletter started. So that's really how things came together. Then another person, Elodie, who is based in Cameroon, also joined us in the adventure. And so now it's the three of us. We're all doing that really on our spare time. We love three of us actually very very closely related to the topic of startups in Africa, so we do that on our spare time, and so it's still a little bit of a pet project, but it's grown a little bit now. It's a little company, it's registered, and it's monetized, and it keeps growing, and it's fun because it's a fantastic way to talk to more people. and to engage with like tons of investors and startups and so on. So that's really the fun part of it.
Yeah, definitely. Okay, let's go a little bit into detail into like, the actual kinds of data you've been putting out. I mean, I don't know. I think like last week I was reading one about just how, the rest of the world, right, has seen a huge impact on, like a downturn in the VC space, but Africa is still skyrocketing, to some extent. Obviously, March and April is like a little bit below, January through January and February. But yeah, just talk us a little bit about the data that you guys have been collecting, what you're seeing just, in the African landscape, and what keeps you up at night, just, from putting that data
together.
No,
so what you mentioned here on like comparing what we're seeing in Africa versus the rest of the world it's been super interesting in the past couple of weeks. It's true that just by looking at the data for the first 5 months of the year, it does seem that to a certain extent, Africa seems to be a little bit more immune to the capital market crisis that's being faced in the US, in Europe, and in other regions. I think that there's a number of structural reasons behind that. What I would say is the main two reasons probably that we're seeing with Max as well is the fact that number one, the magnitude of the problems addressed by startups in the continent is so huge that even when there's a crisis, these problems are in these markets are not going away because it's about giving access for people to primary needs. Moving around, eating, accessing energy, accessing banking, and so that's the number one. Number two is that if you look at the companies that are fundraising in the continent historically, those are companies that have very, very strong fundamentals. To raise from VCs in Africa, you need to have strong financial traction already. You need to have a lot of customers, active customers, and so on. It's very difficult to raise if you don't have a strong traction already. And I believe startups in the continent are being asked things from investors that startups in the Silicon Valley are clearly not being asked. And so the scrutiny level on startups in Africa has always been much higher than in a lot of other regions. And so when a crisis comes and there's more scrutiny on deals, I guess the delta is much bigger in regions where there was less scrutiny before than in Africa, where there's always been a lot of very in-depth due diligence and requirements like what's your road to profitability? When are you going to break even? How much revenue have you clocked in already in the past couple of months? These are questions that a lot of startups in other regions are not necessarily being asked. So all these put together translate in some kind of resilience level for the startup ecosystem, I believe, in Africa, which doesn't mean that we will not see a dip at some point. There is obviously also a lag effect. Some of the deals that are being announced now might have been closed much earlier this year, or actually even at the end of last year. So this was an argument that I heard a lot. I believe it was true a lot for the first quarter.
Yeah.
It's getting less and less true. So I think, June, July, August would be very interesting. Typically, there's a lot more funding being raised in the second half of the year than in the first half of the year. So it's even in the multiplayer is even between 2 and 3 each year. So you have twice as much funding raised in the second half of the year than in the first half of the year. So now we are entering the moment of truth for 2022.
Oh, that's very interesting. I thought, just from VC funding during summertime, isn't it usually a little bit lower than during the beginning and towards the later time of the year?
Typically, especially I would say July and beginning of August are typically a little bit more quiet.
Yeah.
But it's also when a couple of large deals that have been sort of in the pipe for a couple of months are being announced as well. So it's not necessarily, I would say the number of deals gets typically a bit lower, but the amount of funding that doesn't necessarily be too much.
Yeah, that makes sense. Awesome. Yeah, I mean, I think I really enjoyed the point that you mentioned earlier when you mentioned that, you know, a lot of the founders on the continent, you know, are so much more resilient, right? They get asked so much traction at very early stage, and I'm talking pre-seed and seed, compared to some of the founders, you know, in Silicon Valley that are raising millions with barely any traction or even like, you know, means to even revenue. Which is one of the reasons why, again, I think I'm super excited just about the ecosystem as a whole. So let's switch gears a little bit from Africa the Big Deal to Catalyst Fund. Could you tell us a little bit about, you know, what you guys do at Catalyst Fund and how you guys are getting involved with the African ecosystem?
Sure, yeah. So Catalyst Fund is a program that was started by BFA Global a couple of years ago, with the ambition to accelerate inclusive fintech startups in various regions, from Latin America to Africa to South Asia. In the past couple of years, we have actually accelerated over 60 startups, with a good 2/3 of them being in Africa, including some names that are quite known by the ecosystem by now, like Chippercash or Wasoko, formerly SocoWatch, or Cowrywise, or Quora. So yeah, there's been a couple of really interesting success stories, especially in Africa for Catalyst Fund. We typically provide the startups with funding, coupled with up to 6 months of venture building support, very much customized. So basically, imagine that for 6 months we become part of the team of the startups that we support. We have different specialists in the team working on tech, UX, UI, design, sales, marketing, fundraising support, and so on. And these specialists are allocated to the startups to work on very specific scope of work and sprints during a period of time with the startup. So yeah, that's been really the signature of Catalyst Fund, has been always to have a purpose-built support, custom-built support for each of the startup.
Yeah.
And so yeah, we've been supporting 6 startups every 6 months for the past couple of years, and right now looking to onboard our next cohort that will focus increasingly on what we call climate resilience. So still with a fintech angle a little bit, but really a strong focus on climate adaptation and climate resilience. So basically solutions that allow vulnerable populations to adapt to the negative effects of climate change, which unfortunately is already a reality in a number of areas in Africa. So yeah, that's really our current focus at the moment.
Awesome. Okay, so you said a lot of things, and I think I have 2 questions just based off of, you know, what you mentioned. I really want to get a little bit into the climate resilience part, but before I get there, I think you mentioned a little bit how Catalyst Fund works, which is pretty much a venture builder. And I think a lot of the times people get confused about the difference between an accelerator or an incubator versus a venture builder, which I personally think are completely different. And I know the definition, but I think there might be some viewers that might benefit understanding the difference between joining an accelerator or an incubator versus, you know, a venture builder.
Yeah, so I mean, I guess there are different definitions there. I wouldn't necessarily call ourselves a venture builder. I mean, we're doing venture building, but we're not taking the startups from day one. We are onboarding them where they're already incorporated. They already have a product that is usually live, at least an MVP. They already have a team. We're not like putting together the teams and so on. So at the moment, we're really focusing on existing startups that we try to accelerate. So in that perspective, we're really an accelerator. But as part of this acceleration, we're doing also venture building. We help them build their ventures, but not to be mixed indeed with like venture studio or things like that would basically start companies from scratch and then sometimes look for the team to run this company. So it's a little bit of a different model.
Got it.
So I think we're probably, we're not incubators either. I mean, I think we are really at the later stage of Accelerator. So think, model like, Techstars or Startup Bootcamp or this kind of models. That's a little bit where we would fit.
Okay, awesome. So I would say maybe at a hybrid of Accelerator for companies that are post traction, post MVP, and then you guys are just helping them scale to the next level of whatever that may be for them for a certain period of time.
Really.
Okay, that makes sense.
Finding product market fit and scaling. Yeah, that's exactly it.
That's very interesting because I don't think I've heard of that before, which again, it's not necessarily like something completely different. It's just something that is being done right now with some improvement to it, which I like.
I mean, it's our approach is basically to say that, there's a critical moment in a startup life where they've been able to have a small team, 2-3 people. They've been able to maybe build the first app and do a first pilot and so on. But now is the time to launch more broadly, to scale more. And this is where you would very quickly face the problem of accessing funding and accessing talents. And our approach is really bridging both. On one hand, we're giving funding. With the other hand, we're giving a skill set and access to a team that already have this skill set and can really help you fix the different problems and build your product right away. So that's our approach. We also help them on the background to recruit the team and so on. But basically during these 6 months that we work with them, they can really rely on our team to build the solution.
Okay, awesome. Okay, let's now go to the climate resilience part. Could you give us a good example of a company in Africa right now that really get you and your team excited about, around? Because I think I always get a little I'm trying to wrap my head around exactly what a company, right, that is solving that particular problem, what exactly that would look like. So if you could just give me an example.
Sure. I'll give you 3 examples. One that is part of our portfolio. The other 2 that we wish would have been part of our portfolio, but are a bit too later stage. First of all, it's important to distinguish climate resilience with climate mitigation. So most of the climate tech companies that we tend to see out there are usually in climate mitigation, meaning solutions that help reduce the amount of CO2 we're putting in the atmosphere. And so think, solar powered energy, or this kind of solution. Basically help reduce the CO2 emissions. Climate resilience is how do we adapt to the already existing negative effect of climate change. And here you need to think droughts, floods, water scarcity, wildfire, and so on. So basically the approach is to think, okay, climate change is already unfortunately a reality. And in the very specific case of Africa, if you think about it, while Africa doesn't contribute much to the CO2 emissions, it already gets disproportionately affected by the negative effect of climate change. And this is happening today. And so that's what we're really trying to focus on. Now, to give you examples of solution in that space, a couple I can share is there's one around basically building climate smart agriculture. An example here. Can you hear me still? Yeah.
Yes, I can hear you.
Okay. One example here could be a startup called Oko Finance, who is operating in Mali, for instance. They provide farmers with crops insurance in case of droughts, floods, and other natural or climate change related disasters. So that's one example, and there's a lot of things around making agriculture more, climate smart. How to use less water, how to basically be able to grow regardless of the climate, the change in climate. So maybe in a more controlled environment, using greenhouses and so on. So there's a number of topics within agriculture, obviously. Another example I can give to you is a startup called Aquarage. They're in Kenya, and they are involved in. They are basically a fish farming platform, working with smaller fish farmers, and here basically helping them to build a more sustainable way of producing fish protein. Right. Again, climate change means increase of temperature in the oceans, lakes, and so on, meaning that, unfortunately, fish, like wild fishes, are becoming increasingly scarce and more difficult for fish farmers to make a living out of that, for fishermen, sorry. And so an alternative to that is, instead of fishing those fishes in lakes and in the ocean, is to grow them and in cages and ponds. And so that's where, there's a lot of different tech solution that can help these fish farmers produce and harvest fishes in a more sustainable way. So here is another example, and everything related to that. How to provide credit to these fish farmers so that they can scale and so on. A last example I can share with you is related to climate smart housing. And here an example that comes to mind is a company in South Africa called Lumkani. And what these guys are doing is they basically provide insurance for houses in townships, so informal settlements and townships in South Africa, in case of wildfires, for instance.
Okay.
So yeah, you see, these are three fairly different sectors, yet all connected by one topic, which is climate change.
Wow. Yeah, that was beautiful. And now I have a better understanding of, what climate resilience means and some of the solutions that, are out there. I'm going to ask you an interesting question. We are both investors. And it's, at the end of the day, we're investing. We want to make sure that we get a return on our investment. I want to understand, especially for, these particular kinds of companies, what are exit strategy? And if you don't feel comfortable answering this, it's fine. Just let me know. But what do you see would be an exit strategy in the next 5-10 years for these particular companies?
Well, with these particular ones, I mean, I guess it differs quite a bit from one to the other, but there are already quite a few exit strategies. I mean, if you think in the fish farming sector, this is really a completely booming sector with a number of very large players, especially in the production of fish feed. So you could very well imagine a large global fish feed manufacturer keen to acquire a startup like Aquarage, for instance, to basically have a better access to the distribution and be able to distribute fish feed with a more granular level to fish farmers. So that could be an example. In the case of the crops insurance, you could very well imagine again a large insurance company for which it would make sense. Again, you need to think that, in all these examples, at the end of the day, these companies work with very small older farmers, small older fish farmers, and so accessing them for large corporates is always complicated. So acquiring a startup that is already working with thousands of these makes a lot of sense in terms of reach for the growth of larger corporates. So that could definitely be some exits. Another one. I mean, most likely for this kind of companies, it's exits are more likely to come from acquisitions. But it could also come, not just from corporate acquisition, but it could also come from other startups or scale-ups acquiring
Got it.
them because they want to move in the markets where these are.
Okay.
So yeah, that could be another approach.
Awesome. Talking a little bit more about just, again, the exit and the VC space and the investment. And I think this is a little bit of the combination from Catalyst Fund and then Africa the Big Deal. Right now, there's so much focus in terms of funding and VC money going to the Big Four. We all know that, right? And I think for us investors, I'm Cameroonian, right? And I've had a lot of fear. Like I've seen some really great deals in Cameroon, in Cote d'Ivoire, like in Congo, Togo, right? Like these are like places that are not necessarily like the popular, VC sectors. And I think one of the biggest fear from a VC perspective is if I give them money, right? And I know they're doing great. I know that, it's a good team. They have a good product. The market is there, but will they be capable of going out there and raising more money? Especially if all the investors are not looking in those markets. I don't know if you have an answer for this, but I'm curious because you look at these data points on a daily basis. What would be some advice for either founders that are in those regions or investors that might be interested in getting to those regions that are not necessarily the popular places?
Yeah, no, that's a very good question. The first thing is to start with. The good news is that there is, yes, the Big Four are attracting most of the funding, and this will probably remain to be the case for a number of years. But there's a lot of countries, knocking at the door of this club, right? Mm-hmm. Think Ghana, Uganda, Tanzania, but also Tunisia, Morocco, Senegal, obviously, with a number of large deals recently. So there's definitely a number of markets that are growing. Mm-hmm. And if you think about it retrospectively, just 5 years ago, or even more recently than that, 3 years ago, we were not talking about Big Four. It was a Big Three. Egypt was not there. And in a lapse of a year or two, they have really caught up. And the Egypt startup ecosystem is now one of the most thriving in the continent. So, these things are changing a lot because, yes, even if those four are ahead of the pack and in startups locally have raised a lot, it's, in proportion to like the global VC amounts, it's still quite minimal. So you could very well get put back in the club if you have 2-3 startups raising large deals. And so, that's the first thing is things are changing. And so I would definitely encourage investors to look at these other markets. Because there are amazing startups there, and there are more and more. I mean, there are a number of markets outside the Big Four that are today where the Big Four countries were 5 years ago. Yeah. So and I'm sure a number of investors wished they had invested in a couple of promising startups in the Big Four 5 years ago, like Paystack or Wasoko and so on. So that's the first thing. The second thing is if you want to invest in those markets, work with local angel investors, work with local VCs. There are a number of them. There are more and more. There's never been as many local investors as today, and so. Yeah, work with them. They know the markets, they know the ecosystem, and so if there's a couple of local investors that invest in the local startups, I think for me it's a strong testimony of the fact that the startup is being sort of a good bet and probably being de-risked by the support they're getting from local angel investors. So that's the other point.
Awesome. Well, Maxime, this has been an amazing podcast, but I always end the podcast by asking you one question. The whole point of this podcast is about living the African dream, right? We all have big dreams and big goals and hopes for what we want to see on the continent. So I'm going to ask you, and there's no right or wrong answer for this question, but really, Maxime, like, what is your African dream as you continue to get involved into this market? What are your hopes for what's going to happen?
That's a $1 billion question. No, I think it's really that we continue to see the development we have seen in the past couple of years, and even accelerating. I think the position of Africa in the global startup ecosystem is growing, and I think there's still a lot of work to bring this ecosystem to where it should be. What really excites me is to see more and more companies in the continent solving problems that elsewhere in the world are often solved by public institutions or large corporates, and here this is being tackled by startups, and they do a brilliant job at solving this problem. So that really excites me. I think there's a lot of opportunities in those kind of sectors where local public institutions are not necessarily doing what's expected from them, and the startups are coming in and tackling that, and to close the loop here, I strongly believe that climate change could be the next area where startup could make a difference, especially in the climate resilience. So yeah, really excited to be a tiny contributor in maybe helping that new phase.
Awesome, amazing. Well, thank you so much, Maxime, for sharing your word of wisdom. It was such a pleasure having you today on the Live the African Dream podcast. Thank you all for tuning in, and I hope you all have an amazing rest of your day.